Hello there. Good afternoon, everybody. Good afternoon and welcome to ActivTrades Monday Market Matters webinar for the 10th of June 2024. Paul here. I hope you are well. Hope you've enjoyed the weekend. I hope you've enjoyed the rather eventful events of the last couple of days, especially those of us here in Europe. More of which later. But today we are here on Monday Market Matters to talk about trading trend reversals as our main educational piece. As always, always appreciate for those of you joining us live in the session today. For those of you who are here, if you can just confirm that the technology is working in our favour, if you can confirm that you can hear my voice and see the slides, that would be much appreciated. Just put that in the chat box. So last week we talked about trading using market structures, and in particular talked about trading reversals using market structure. And as I said, today's session is just taking that a little bit further in terms of being able to understand and trade trend reversals as part of your normal sort of trading activities. So plenty for us to talk about that. Super. Thank you very much. So what are we going to talk about today? As always, we'll talk a little bit about the news and Monday Market Matters in general. But as part of understanding reversals, we'll talk about the main market phases. We'll also talk in general about how and why people trade reversals and why many people are challenged and struggle with them. And then, of course, we'll talk about, what tools can we discuss and learn that can actually help us in terms of engaging with trading trend reversals? And then, as always, we'll switch across to the live markets in once we've finished our slides here, okay, and hopefully after the American session has begun. So, as always, I appreciate that we always have people joining us for the first time. So if you are, welcome to Monday Market Matters. It's our regular webinar series that is every Monday at 2 o'clock London time. And the whole idea is to basically help traders start the week in the right frame as we prepare for the opening of the US markets in about 25 minutes. So we always take a look at the major news for the week ahead. So to be aware of it, we have the main piece about education, helping you build your knowledge in engaging with markets. We always have a chat about the ActivTrades platforms and tools that you have access to. And then we finish off with a look at the live markets at the start of the US session. So there is always plenty for us to discuss, always plenty for us to go through. So let's have a quick chat about the news. Now, I say this every week, and I never make an apology for it, okay? If you're new to trading, I don't expect you to be able to analyze the economic data, but it is unbelievably important to know when that economic data is coming out, and you can find that out on the economic calendar. There is one on the ActivTrades website and elsewhere on the internet, so there's no excuse. It's important to know when that information is coming out, because very often it will induce volatility into the market. And if you're on the right side of it, that can be enormously helpful. If you're on the wrong side of it, that can be enormously challenging. So it is the smart move to basically check the economic calendar and know what news is coming out. And last week we had a lot, there was quite a lot of data and quite a lot of change data in terms of we had both the ECB cutting European interest rates, we had the Canadians cutting their interest rates. We had what I would describe as interesting numbers for the NFP. NFP was expected, I think it was around about 165,000, but I think the number came in at about 272,000, and of course that created a great deal of volatility and a great deal of stirrings, okay, and put back American interest rate cuts. Certainly they're kind of putting back to sort of September at the earliest. But the reason I said they were interesting numbers is that if you actually looked into the numbers and looked into the data, you would see that actually once you sort of scratch the surface, you were pretty much left scratching your head. When you looked at terms of the number of permanent jobs that had been created, I think they'd lost something like about 600,000, and actually the jobs created were I think about 280,000. But the of which those were part-time jobs. Okay, and you can actually go even deeper into the data itself, and it kind of looks a little bit, as I said, it looks a little bit like it would leave you scratching your head. But the headline number is what induced volatility and got markets moving, and perhaps this week we will see a reaction to that. So when and where would that reaction occur? Well, there's no real major news out today, economic news. However, markets have been dealing with the, let's say, the sort of the kind of fallout from the results of the European elections over the weekend, and pretty much, some major changes occurring. I think there was a Prime Minister in Belgium lost his job. Austria had a big change. Spain had big change. Germany had big change, but also France had big change, which led President Macron to basically close down Parliament and push for, I think, a national election at the end of this month. So lots of events occur, all of which bring volatility into the market, all of which we will look at in a short while when we switch across to the live markets. But in terms of a little bit closer to home, yes, there is Australian news tomorrow, but we also have UK unemployment data tomorrow morning, 7 o'clock, and we also have UK GDP data on Wednesday morning. So that, for those of us here in the UK, closer to home, those are the kind of two major elements, which will, of course, be keenly watched by traders anyway. But because, of course, we're into the election cycle at the moment, and seeing whether that can in any way, shape or form sort of save Mr. Sunak after his rather challenging week last week remains to be seen. But we do have, as you said, you can see they've got a lot of data coming out on Wednesday, but I suspect the major one is, of course, it's the FOMC meeting there and statement on Wednesday evening. Now, I don't think, I think most people are not expecting any kind of cut in interest rates. Okay, that would be a bit of a shocker for people, but naturally people will be interested to read the statement and understand the views of Mr. Powell and his team. And that, as I said, if anything, might be the thing that sort of acts as a counterweight to the moves of Friday. Thursday, we've got, having had the sort of American inflation data on Wednesday, we've also got the PPI American data and Australian consumer confidence. And then interestingly, on Friday, we have the Japanese Bank of Japan meeting there and their interest rate decision. And people will be keenly watching that to see what that brings to the fore. And we also have American data. Okay, so American data kind of Wednesday, Thursday, and Friday. All right, so that will be keenly watched. And as I said, UK data Tuesday and Wednesday, they will all be sort of keenly studied by traders. And as I said, if you're a new trader, it's important to know when that data is coming out. Okay, so that you can manage yourself accordingly. Having looked at the news, let's have a look at our education piece, which is about trading trend reversals. And as I said last week, we did a piece on market structure. Let's call it like the first piece on market structure, which was about trend reversals. We'll do a future piece on trading trends using market structure, but we also said that this week we would be expanding on that and looking at other ways that people might like to trade reversals. And as the slide says, many traders, they like to trade trends, and many will like to trade reversals. And of course, regardless of however you look to trade, however you look to engage with markets, if you're a reversal trader, then really you're always asking yourself, what can I do to improve my chances of success? And there are many ways for traders to help understand reversals so that they can position themselves accordingly. And so today, what we'll talk about identifying reversals and how to engage with markets that are in the process of reversing. And we'll share a few ideas that hopefully you can take away and utilize in your own trading. Before we do that, it would be interesting to know, for those of you here in the room live today, how many of you actually trade reversals as the main thrust of your trading plan? If you could put that in the chat box, it would be useful. And in, you can also add in, how you do it and what your experience has been, what you've learned from it. I think it's always great to be able to share other traders' experiences. We can all learn from everybody. I'm a great fan of that. I think that helps traders move along. But it would be interesting to know how many of you trade reversals already as part of your trading experience. So Simon says, not trading reversals per se, but I would like to improve my knowledge when it comes to spotting them. That's fabulous, Simon. That's why these sessions are here. All right, to help educate you and improve your knowledge so that you're able to operate more effectively within markets. Thank you. Thank you for that, Simon. As always, first things first, the question might be, why are you trading reversals? Okay, what is it that has brought you to that point? And it might seem a bit of a strange question for our session, but it is truly crucial to understand your drivers as to why you're engaging with markets in a certain way. Is it because you have an edge? Okay, you have an edge in that style of trading, or is it because your ego is in control? And what does that actually mean? Well, very often, many new traders are taught that actually, as you start off in your trading journey and you gain your trading experience, that you should look at trading trends. The challenge that can be is that markets only tend to trend 20 to 30% of the time. So an awful lot of the time, markets are either consolidating, or they're in transition, or they are reversing. And very often that can lead to basically traders getting maybe a little bit bored, a little bit frustrated, or if they have seen that a new trend has started and they've not had a chance to join it, very often that induces new traders to invariably start to try and trade reversal. They think that they can call the top of that trend or the bottom of that move, and they're going to trade the reversal, and that is their ego. That is their ego in control, okay? And that's their ego projecting, okay, their needs and drivers and darker elements of their personal self onto the markets, okay? So you have to ask yourself that question, all right? If you're going to trade reversals, do you really have an edge? How do you go about it? Or are you doing it because your ego is in control and you're a bit frustrated that you missed the entry on that trend trade, or you're experiencing a bit of FOMO, fear of missing out in another way, and actually just looking to trade a reverse because it's right there in front of you? So, you don't have to put your answer to that in the chat box, okay? If you wish, you're very welcome to, but it is worth spending some time reflecting upon, ladies and gentlemen, to truly understand what are your drivers and are you making good decisions for yourself. What I've talked about in the past is that I generally believe there tend to be 5 phases of the markets, and almost your first job to do is to identify, where possible, what phase is the market in, okay? Because once you're in that, well, then you can align yourself accordingly. So 3 of the most simplest ones. Phase 1, okay, one phase is a downtrend. And as always, good trends leap off the chart at you. You hear me say that every week. You don't need to force it. You don't need to chase it, okay? If you're struggling, and you find yourself chasing it and forcing it, it probably isn't a trend. So one phase is a nice downtrend. The other phase is a good uptrend, okay? That's there and that. And then one of the other phases is a clear sideways range, okay? You might call that sideways, you might call it ranging, you might call it consolidating. However you wish to label it, I'm not entirely, worried or fussed. The important element is that you understand what it is. So those are kind of 3 of the 5 market phases, all right? And most people with a little bit of practice, a little bit of endeavor, can identify those. As I said, we all like trading trends. The challenge we have is that markets only tend to trend 20 to 30% of the time. That is the challenge. An awful lot of the time, markets are in a sideways consolidated environment. And as I said, being able to understand that as quickly as possible can help you align yourself accordingly. The other two phases, okay, one of them is a transition from a downtrend to an uptrend. So this market here has been in a downtrend, and then actually what we see is it flushes, it then basically consolidates, and then effectively it moves, okay, it transitions and it turns around. Or on this occasion, you have a transition from an uptrend to a downtrend. Price in a nice uptrend. Price actually puts in a very nice evening star formation. Price then basically makes effectively a false breakout, and then basically price starts to maneuver the other way, creating bear flags before we sort of move down. And some people might even sort of say it's a version of a head and shoulders pattern there. So those are the two other phases. We're transitioning from a downtrend to an uptrend, or we're transitioning from an uptrend to downtrend. Like you can see on my slides, they can be very messy. Okay, we love to see reversals that happen very clearly, but that is very often not the case. Sometimes they will be, and when they are, they'll be very clear and obvious to you. Other times, those transitions out of a downtrend to an uptrend or an uptrend to a downtrend, they can be quite challenging. They can be, the price action cannot be very clear, and especially if you're a new trader, that can sometimes be a challenging time to trade. So my own suggestion is at the beginning of your trading journey is, if you're unable to identify whether it's clearly downtrend, uptrend, or sideways, well, then my suggestion is always just sit on the sidelines for a small while. There's a very good chance the market might be transitioning. Let it do that transition and then look to engage afterwards. But with a little bit of time, a little bit of experience, a little bit of practice, you start to be able to recognize when markets are transitioning, and also when those reversals are sometimes quite clear and providing a reversal trading opportunity for you. And that's what we're going to focus on for the rest of our session here. So as always, I appreciate that sometimes it raises questions for people or the thoughts. If you've got questions or etc., then by all means, please feel free to put them into the chat box. I will, as always, I will do my best to help you and answer them. But by all means, feel free to put those any questions you might have in the chat box itself. So what we want to do is we want to basically identify the many different ways to find a possible reversal. Okay, generally, I think there are these kind of five particular ways you can do it. Now, they in themselves can be broken down into many different opportunities for you, but what I generally tend to have is price action candlesticks, as a way of reversal. When you get more than one of them, then you're getting into a price action reversal pattern. You can also have a trend line break. You can also use indicators to identify diversions, and you can also look at market structure. So there are 5 ways that you could identify possible reversals. Now, we covered market structure last week, so this week we're going to focus on those first 4: price action candlesticks, price action reversal patterns, trend line breaks, and divergence. Now, what you will see is that you'll hear me talk about this all the time, is that sometimes one of those ways will provide you with a clear, identifiable opportunity to trade a reversal. Sometimes there might actually be 2 or 3 elements coming together all at one time and place. And you hear me talk about this all the time, about a confluence of events where you get 2, 3, 4 things coming together at the same time and place. That is what we're always ideally looking for. However, there will be occasions where you just get very clear reversal trade identifications or opportunities, and that's what we'll have a little chat about now. So first one is just price action candlesticks. People forget, but by their very nature, candlesticks are a simple reversal pattern, and it might be a 1 pattern, 2 candle, 3 candle pattern. Okay, so people will trade rejection candles. Okay, pin bars, here we go, as one candle reversal pattern, okay, in itself. They might also have things like engulfing candles here. Just draw that there. Engulfing candles, so, a bearish engulfing candle or a bullish engulfing candle. They might use those. One of my own favorites, which is key reversal candles, okay? So that would be these ones here. Okay, so, bearish key reversal, which is where price pushes to a new high, rolls over and closes beneath the low of the previous candle. Or a bullish key reversal whereby price pushes to a new low, but then rolls over, climbs, and basically closes above the close of the high of the previous candle. So that can all be used, or even things like morning and evening star formation. So that's a morning star formation, big bearish candle, reversal candle followed by a bullish follow through, or an evening star where we have at the end of an uptrend, big strong bullish candle followed by what might be sometimes a hanging man, what might sometimes be a pin bar, what might sometimes be a doji or a spinning top, followed by a very strong bearish candle, reversal candle. That's what makes an evening star. So sometimes, as I said, people forget by their nature candlesticks are a reversal pattern, but as I say every time, there needs to be something for it to reverse. You need to have a trend in place for one of these candlestick patterns to really have any genuine validity. If you're in the middle of a range, well, it doesn't matter how many pin bars you're having there, that's not really particularly helping you. That's what you have to take on board, okay? That's not really helping you whatsoever, okay? Remember, they are a reverse pattern, but they need to have something to reverse, and that's crucial to just understand and take on board. The second one is price action reversal patterns. So this will be where candlesticks come together and actually can form part of bigger chart patterns. And there are certain particular ones that can help you, okay? So ones that I particularly like myself are such ones as a double top or a double bottom. Double top, price is in an uptrend, and then as you can actually see, prints like an M pattern before price reverses. The opposite, a double bottom, price has been in a downtrend before it, almost like price creates a W, double bottom, before it rallies. Head and shoulders, okay, are, as the name implies, you've got a head and shoulders, and what we're looking for is, here we go, just excuse my drawing. As I say, I'm a better trader than I am an artist, but what you can have is a head and shoulders pattern, and it is actually the relationship between the right shoulder and the neckline that can help provide an entry into a bearish move, or you have the opposite of it, an inverse head and shoulders, where you have, as you can probably see yourself there, left shoulder, head, right shoulder. And once again, it is the relationship between the right shoulder and the neckline that provides an entry as price rallies higher. And one of the other final ones is a rising wedge or a falling wedge. And this, as I said, wedges you will find on everything from a 1 minute chart up to a 1 month chart. So, the thing about these patterns is they are fractal in the sense that you will find them across all time frames and all instruments. What you just need to be able to doing is, as part of your analysis, making sure that you're doing a good scan to recognize when these particular reversal patterns start to show. You'll see lots of double tops and double bottoms on intraday charts, okay? And actually, I'd also say head and shoulders and wedges, you will see plenty of them on an intraday basis. The only thing I would say is that the higher the time frame, the more validity any price action reversal pattern has, because there is more data going into the creation of that pattern, and that's what we're particularly looking to work with. The third way to trade reversals is a trend line break, right? Now, I always talk to traders, new traders, and say that, it's very important for you to draw in horizontal levels of support and resistance. Lots of traders will take on trend lines, okay, as a way and a means of identifying trends and identifying dynamic support and resistance. The only thing I'd say as an experienced trader is that trend lines can be a bit subjective, as in people will draw them a little bit differently. So what you need to do is, and what I always suggest is that if you're going to use trend line break, it has to be when it is a very clear trend, okay? A very clear trend. You can see a couple of examples of here, okay, where it is a very clear trend and where there should be at least, 2, preferably 3 touches, okay, of that trend line before it's broken. Because when it's broken, that can be a great time to trade the possible reversal, right? And there are lots of different variations on that. Experienced traders, can look at that, and what you'll quite often see, those who trade trend lines will talk about something that kisses the trend line goodbye. Okay, maybe we'll have a little look at that here in a moment. But interestingly, when I use these, I don't put the instrument up or the time frame up, because actually it's almost like you have to train yourself to be able to see and operate and work and identify these. And it doesn't really matter whether you're trading commodities or FX or crypto or equities, okay, or fixed income, etc. Once you're in a position to identify and see these, well then, once you've got that cognitive recognition ability, you will see them across, all instruments and all time frames. The interesting one here in this particular example here is that for those of you who were here last week, we talked about, using structure to help identify reversal. Here, this was at that time, this was your ultimate low. This was your VB here, okay, your swing. And then basically we had broken the trend line, and then we basically broke the VB line and stuff. And then, as you can see, that was just confirming that basically we had formed, a low, and we were basically starting to reverse and trend right. And that's what we're looking at here. In this particular case here, what I like about it is that there's a very clear supporting trend line. Price has been, you can see it's been working up, okay? And then this is interesting. I always talk to traders about, we can see price starts to accelerate and start to move its way up. And then what does it print here? Well, it prints the double top, which is what we've just looked at here. So you've got a double top there, which we know is a reversal pattern. Price comes down, and then price breaks the trend line here. It breaks the trend line. So you've got a reversal pattern followed by lower highs, followed by a break of the trend line. And then I'm just going to clear this just to help people. Once we break it, then price comes back to kiss the trend line before it falls away. So experienced aggressive traders might have been getting short here. Trendline traders, break traders might have been getting short here. Other traders might have been getting short when it comes back to kiss the trend line. There are variations on it, but part of that will come down to how aggressive or risk averse you are as a trader. But if you're actually able to identify the actual context, the environment that we find ourselves in, that is the sort of thing that helps us sort of move and understand the way we're going to operate that, and how we utilize trendline breaks. So, if you're a very simple way is that, once prices close the other side of the trend line, you'd be looking to be a buyer with your stop loss beneath the sort of the most recent low. That's the way we would be looking at it, giving yourself the opportunity for a price to sort of do its maneuvering before it takes off in its new direction. And then one of the final ways is to use a thing called divergence, all right? And it'd be interesting to know, if those of you here today, how many of you either know of what divergence is or already utilize it in your trading. But it is a useful tool, because understanding how to utilize divergence can help a trader turn an indicator from a lagging into a leading indicator. As a leading indicator, divergence can help us identify a change in momentum in trend that may signal a possible reversal approaching. Okay, so what you'll find is traders will quite often use the following indicators: MACD, stochastic, or RSI to identify divergence. And what does that really mean? Well, what I have here is there's price, there's the moving average. What we can see here is price is in an uptrend. Price makes a newer high here, doesn't it? But what happens is the indicator fails to make a new high. Okay, the indicator actually fails to make a new high. So there is now a divergence between what price is doing and what the indicator is doing. And that divergence is almost like an indication that the current is changing. Okay, the underlying current is changing, and what we can see here is that once you identify that, price reversed, didn't it? It transitioned from being in an uptrend to a downtrend. And in this example here, price, had been in a downtrend. Okay, price into downtrend. It made its ultimate low. They made a new low there. Okay, but actually, what we can see is the MACD didn't make a new low. Ideally, the MACD should be following through and should be making a new low. But when it doesn't, well, then, we've got, a lower, we're lower here, then lower here, then lower here. But actually, we're making higher lows there. Okay. There is divergence. And that, as you can see, price reverses and takes away. And so that is actually how we can use divergence. And it can be a really useful, really helpful tool, and we'll talk more about that in a moment. So, all of those elements that we've just discussed, they can help you identify possible reversals for you to trend. However, you start to improve your chances when you combine different reversal tools together. And that's what I was saying, just at the start of our session, how understanding when you get a confluence of events, when you're getting 2, 3, 4 things coming together in one time and place, that is what actually helps you create the best reversal setups. And as it says there, it helps nudge the probability of success in our favor. And we're always looking for anything that can do that. So, as always, we're always looking for that confluence of events. And those of you who've joined me, over the last year or so will know that, I talk a great deal about how confluence events is enormously beneficial and helpful to you as a trader. And as always, with a bit of practice as part of your analysis, you'll recognize such confluences. You'll start to see them quicker and faster. The more you practice, the better you'll get. That pretty much goes for anything in life, doesn't it? And, analysis and trading is exactly the same. Let's have a little bit of a look at just a couple of opportunities here, okay? Just to sort of, put it into perspective. So this is the euro yen. It's the weekly chart. And what we've got here is we've got divergence followed by a trend line break. So hopefully you can see there, the price has been moving all its way down into a nice trend there, okay? Making the nice moves there. But what we actually also had was that, whilst price was making new lows, the MACD wasn't, okay? The MACD histogram was the MACD in this particular case. Let's clear this. Here we were actually making bush. We can see that there was divergence. Remember, if there's divergence, then we start to expect that there will be a change in the trend. And what we had here was, we had 2 trend line breaks. We had the first one, okay? We had the first one here, which is let's call that like the aggressive trend line. But remember, this is a weekly chart, okay? So, it happened over, 1, 2, 3. It happened over about 4 or 5 months. So it wasn't something that happened, on a minute by minute basis. You time to watch out. Or for those of you who are, let's say, more risk averse, well, then, there was a deeper, longer trend line, okay, that broke here. And so that's clear. So we can just give you some. There would have been many people who, once we've closed the other side of that trend line, would be looking to buy with the stop loss beneath the low. Or others, looking to buy here, okay, when we close across the other side of the trend line. And as I said, might just have their stop loss beneath the recent low, but you can see what actually happened there. You can see what occurred there, and that's what we're seeing. And for those of you who are quick to pick up on things, what we see is price had started to pull away there. Okay, price started to pull away, and we've made new highs here, but actually the MACD was telling you that basically there was divergence carrying on there. So there's one day that trend was looking to start to break itself if you're quick enough to pick up on that. But what we're looking for is there were 2 opportunities here that was basically mixing the confluence of divergence allied with a trend line break. Okay, so here is another. This is the US dollar index, and it's the 4-hour chart. And what we had here once again was the sort of confluence events. We had price had been working its way up. price started to accelerate away. We looked at a version of it, an example of it the other a few slides before. And then what happened was we printed, okay, this is interesting, we printed a double top pattern there. Okay, that's what we could see, that's what we could look at and we talked about. But let's just what it also happened is the top of peak one was a bearish engulfing candle, which is a reversal candlestick, and the top of peak two, okay, was a bearish key reversal. So, which we know is a reversal, a one candlestick reversal pattern. So you've got the reversal candlestick, you've got the double top reversal pattern, and then we have a trend line break, okay, the trend line break that occurs around here. So as I said, you've got three things there going on, and a lot of that will depend upon your risk parameters. Okay, some people are much more comfortable with risk. Some people are much less comfortable with risk, and that's absolutely fine. Okay, yeah, you have to work out and understand where do you sit on the risk spectrum. Some people are very, very accepting of risk and very aggressive. Others are not, and that's absolutely fine. Okay, it's about understanding what type of trader you are. All right, it's very hard. It's very hard to be successful when you're trying to be something you're not, and that goes for life and that goes for trading. So part of it is, you hear me talk about it every week, is keep good records of your trading, because by doing that and reviewing it, you start to learn what type of trader you are, where what your kind of risk parameters are, and that starts to build into the way you look to operate. So there's a good example there. Okay, you've got the reversal candlesticks, you've got a double top reversal pattern, and then you've got a break of a trend line, right? So there's kind of three elements all coming together, and that's what we're always looking for. Another example here, this is Euro Yen on the sort of the daily chart. It's kind of an interesting one here. We're kind of putting a sort of a big picture version of it. So we had a level of resistance here, okay, long-term level of resistance. Price had basically was in an uptrend, you can see that. And then invariably what happens is, we make a triple top here. Not a double top, but actually a triple top. But we also get some very bearish candles. One of them, including here, there is a bearish key reversal candlestick. Not only that, but we had divergence going on. Price was hitting this level of resistance, but we can see, okay, in terms of the highs on the MACD histogram, they were getting lower and lower and lower. So aggressive traders might have been looking. Let me just clear this down so you can see maybe a little bit. Bush. Aggressive traders might have been looking to be short there, okay, on the key reversal candlestick as part of the triple top with the divergence, and other people might have been looking at basically being short here, right, once we've broken the sort of trend line. Other people might have looked at being short here when we came back and kissed the trend line goodbye before price moved down. So kind of a multitude of elements going on, but if you know what you're looking for, if you know what you're trying to identify, well, that can be enormously helpful for you as a trader, right? What you might look to start with or focus on is, which kind of version is the most easy one for you to begin with. Is it a price action candlestick? Is it a price action pattern? Is it a trend line break? Is it divergence? Okay. And then actually, as you grow in confidence and skills, well, then you start to add in other elements as well. All right. And that's what many traders look to do. Before we switch across to the live markets, we'll just take a quick moment to reflect on what we've just gone through there. Remember, Money Market Matters is here to support you in 2024, every Monday at 2:00 London time, giving you news, education, and insight into active trades, tools, and markets. I said this right at the start, and I think actually, this weekend has proved it, that it's going to be an interesting year in markets, ladies and gentlemen. And, I hope that you will join us to enjoy that journey. So, as we've discussed today, trading reversals is very popular with many traders, though it is important to understand exactly why you are trading reversals. There are several ways to identify and several ways to trade them. What we looked at today was price action candlesticks, price action reversal patterns, trend line breaks, and divergence. Okay. As you hear me say week in, week out, everything is better when there is a confluence of events of many reversal signals together. I mean, just showed you a few charts there where there might well have been candlesticks, reversal patterns, trend line breaks, divergence. Might have had all of them. I've had a couple of them, but it's that confluence of events, and that's what we're always looking for, always looking to achieve. So, with that in mind, why don't we go and have a little look at live markets now? So before we do, just a reminder, I hope that you will join us, okay, next Monday, all right, Monday Market Matters webinar, and our educational piece will be trading the first pullback, okay? So kind of interesting. Once again, it almost kind of builds on from our session today and last week about how to trade the first pullback. So you can either register on the ActivTrades website, or if you've got your mobile phone with you, you can just look at that QR code and take a screenshot, and that'll take you through to the web page to be able to register for it. And I hope you'll join us next Monday at 2:00 London time. So, as always, okay, if you've got any questions or comments or feedback, well, then we'd love to hear that. And you can do that basically by emailing englishdesk@activetrades.com. You'd be very welcome to do that. Maybe you've got topics you'd like me to cover in the future. Maybe there's particular ideas or thoughts, okay, or feedback. Well, then by all means, send that to englishdesk@activetrades.com, and we will do our best to help you. So if you just bear with us for a moment, what we're going to do is we're going to switch across to the live chart, see how the markets have opened today. So just bear with me for a moment, and we'll switch across. Okay, so here we are onto one of the platforms. As always, I hope that you can still hear my voice. I hope that you can see the charts here. What I've got here, let's bring up the old drawing tool here. What I've got here is what we're starting here. This is euro. Okay, this is my euro profile. So I've got euro dollar here, euro sterling, euro Aussie, euro Canadian, euro yen, euro Swiss, euro Kiwi, and also that's a DAX chart. Okay, a DAX chart. So here we go. Let me just bear with me 1 second, and what we'll do is I wonder why that was a little bit not happy. And what we're interested in here is, let's just bring up these tools. Bang. Is that what we can see is that I'm hoping you can see here, euro dollar, what we did from Friday, okay, to Sunday night into Monday, we have a gap, okay, we have a gap. Euro sterling from Friday night to sort of Sunday opening, we have a gap, we gapped down. Same with euro yen. From where we closed, where we opened, there's a gap which has filled. Euro Swiss franc from where we closed on Friday to where we've opened. Okay, there's a gap there. Okay, in Euro Swiss franc. There was one on on Euro Aussie. Okay, which hasn't filled. The kind of same with Euro Kiwi. And let me just bear with me. Let's just Euro CAD properly. And just come on. Yeah, there we go. Euro CAD from closing here, it hasn't really filled that gap yet there. So that very often happens. That is a reflection of, the political results coming in last night, and actually how markets reacted to that once they opened. And no surprise, with those kind of shocking results, there was basically, low demand for euros. Basically, people are selling off euros, and so we can see that, from where we closed on Friday and where we opened Sunday night, Monday morning, there was gaps around. What actually happens here? And let's just take a little bit of a look at one of the sort of the main ones here. Let me just let's have a little look on euro sterling. Okay, so let's zoom in a bit. So that's where we closed on Friday. This is where we opened on on Sunday. Okay, and so you can see there's a gap there, and as we know, nature abhors a vacuum, right? Nature abhors a vacuum. When there is a vacuum, when there is a gap, whatever it is, nature will look to fill it. Okay, and so gaps very often fill, and they very often fill within the first day. But I suspect what's happening here is that we were seeing probably a little bit of a longer thing, because people are coming to terms with it's very much like a complete political sort of earthquake, all right? And so we might see a day or two of continued downtrend, and then maybe based upon the American news, we'll see what we'll get the response. Or, because this is euro sterling, when we get UK data at 7 o'clock tomorrow morning, or on 7 o'clock Wednesday morning when it's the CPI data. So, yeah, basically we're expecting that gap to fill at some point, but it's more a reflection of the kind of the market we find ourselves in, and actually how we're going to probably look to sort of drift down a little bit more. Let me just let's see if there's any kind of shift to budge. Yeah, no, that's just like the 30 minutes chart there from this morning. And once again, hopefully you can maybe see from where we closed on Friday night to where we opened, okay, on Sunday night. And just let's have a little look at how big that gap was on this particular instance. So that was 84.88, and we opened at 84.60. So what was that? About 28 pips, okay? 28 pip gap, that's it. And as I said, we'll have to wait and see at what point does it come back up to fill that gap. That's what traders will be doing. There'll be lots of gap traders who'll be looking to see how they could trade. When can they get long in an effort to basically sort of bet on price always filling that gap, and gaps do fill. It's about whether it fills in the within the first 24 hours, or it might not fill. It could be days, weeks, months, even years, maybe even decades, etc. So I just wanted to be able to sort of show you that there to look at it. I thought actually also, before we switch across the US markets, let's have a little look at the European indices. I thought we'd have a look at that because, remember, these are all products that you can trade on ActivTrades, regardless of whether you're on TradingView, ActivTrader, MT5, MT4. They have a broad spread of instruments that you can trade. So what I have here, this is my European indices chart. So I've got here the DAX. This is the CAC, the French index. This is German bonds, okay, German fixed income. This is SP35 is the IBEX, the Spanish index. ITE 40, that is the MIB, the Italian index. Gertech is basically the German NASDAQ equivalent. Euro 50, okay, that's the Euro 50 stocks, European index. And of course, the UK 100 is the FTSE. So once again, all right, okay, lots of products there that you can look to trade at and build a position with. And if I just quickly let's go maybe to 1 hour charts on here, just to we can get a little bit of a view into what has occurred in many of those markets. Yeah. So it doesn't look maybe that big, but we are here, German index, and what's happened is there was a gap. We pushed up, but we didn't close. But then you can see, bosh, as we got into the main session, just a sell off there, not a massive shot. CAC here, CAC closes, okay, and where it opens, there's already a gap, but then actually price collapses even more. And we did try to build our way up from it, but that's not really got much strength or energy there, has it, at all? The IBEX, okay, IBEX, this is where it closed on Friday. It closed on, opened on Sunday, and actually it did go up and fill. The IBEX is the let's say the odd one out, because actually it came up and filled. Here, the Italian session closed here on the Friday, opened here on the Sunday. So we did have a gap. And then actually what happens is we can see that we just collapsed even more before we tried a little bit and pull back, and then that fell away there. Even the Euro stocks. Okay, even your stocks was filled with, or created a small gap itself there. So, when you get it is important to check the economic calendar, but also to understand the geopolitical events. And when those geopolitical events are, the results of them are different from what we expect, that is what creates that volatility. And as I said, it's volatility is one of those things that traders all talk about how they love volatility, but when you're on the right side of it, it's fabulous. But when you're on the wrong side of it, it can be challenging. Hence why you need to keep on top of the news and keep on top of what's going on so that you can make sure, A, you don't get caught on the wrong side of it, but B, as you grow in experience and knowledge, that you're in a position to take advantage of it. And that's what we're looking at here, okay, in terms of those euro indexes and euro currencies. There are opportunities there for different ways to take advantage of that, and you have a fantastic spread of products, okay, of instruments that you're able to trade there with ActivTrades. Cool. So as I said, just looking through that because it's been quite an interesting 24 hours or so, all right, on that, and you can see that. But let's have a little look at the US indices to end our session today and see what's going on the intraday basis. Here we go. All right. So Dow. Now let's just So Dow daily. This is kind of like this is Friday session, which is it's an engulfing candle, but it's more of a broadening formation. It's more of a sort of high wave kind of a little bit of indecision there. That's what we're looking at there. If we look at the 4-hour charts, we're drifting our way down. Now what I'm looking for is here. Let me just draw these in. Bang. I'm always interested to understand what's the what's the highs and lows of the days where with the sessions, the swing points that we're actually working our way with. We haven't pushed to the lows that we had during the European sessions now. We're actually looking to try and push up higher. Let's have a little look at that. Right. Interesting. So yeah, as I said, one of the reasons we do this session now is that I always say that you should give it about 15 to 20 minutes, especially on a Monday, for once the market opens out, all right, because invariably there's a huge amount of volatility that's coming in as over weekend orders start to get filled and as traders start to settle for what they're looking for the week. And we can see there, just even on that Dow 5-minute chart, from where we've opened, we've swung up to the highs, we've dropped down, okay, made new lows, made new highs. There's kind of like really kind of broadening formations there being created, okay, cutting across what they're trying to do. So we're just going to keep an eye on that. But look at Nasdaq. Remember what I said? Here we go. Weekly chart of Nasdaq. We traded and closed, all-time highs. It closed on the Dow, on the Nasdaq, and I'm sure there'll be lots of people who have been celebrating that. But then, look at the daily chart, okay, and not exactly. If anything, it might be said that for the last few days of last week, really we didn't. We just basically pivoted around there. We're drifting a little bit lower here now, so I'm just gonna draw that in. As always, we're just gonna look at where the lows and the highs of the day's been so far, because that's actually what I'm sort of kind of intrigued to see how and if they will act as boundaries for the market. So. Okay, let's just have a little look into that. Yeah, it's a little bit clearer than Dow, but not by much. Not by much. It's a smaller range. So what we have is Dow messing around, but then going higher. Nasdaq's looking to try and go a little bit higher as well. If we look at S&P 500, that was Friday, okay, which was that sort of high wave candle. Interesting, when I see high wave candles at kind of recent highs, okay, recent levels, I start to get a little bit suspicious, shall we say? All right, to see how that particularly plays out. And if I look at that on a 4-hour chart, interesting. There's the high. There's a VB there and stuff. I'll be keeping an eye on that. See how that particularly plays out this week. If I look at 30-minute charts, okay, so. As always, looking for where's the swing points, where's the highs, where's the lows of the day. Here we go, just drawing these in just so that they become boundaries next time we see markets move against them. Here we go, 15-minute chart. It's actually interestingly that if I look at that for the last hour or so, about how how we're looking to set up the SP is actually very quiet there. Okay, that is interesting. I would that would be interesting to see how that plays out. So we can see that Dow really is rallying away. The the Nasdaq is just kind of going sideways, as is the S&P 500. Okay, the Russell has been in a down, but it's turning. I would suggest that it is the Dow that is leading, rightly or wrongly. It's the Dow that's leading, and we go. I'm just going to look and see how that how that particularly works out. How that works out over the next hour or so. I'd be bullish on the Dow, all right, but I'd be watching it like a hawk. Okay, I think that's what I'll be looking at. The SP 500 is just not doing much, and it's interesting because actually, if you looked at the prices last week, as I might have said earlier, Nvidia had lifted S&P and Nasdaq up. But today it's looking like if there's any heavy lifting to be done, it's probably going to be done by the Dow and maybe a bit of the Russell. Actually, weirdly, the S&P and the Nasdaq are the ones sort of trailing behind. So, that's what I'll be looking to focus on the Dow. Use the Dow as a leading indicator to begin with. Okay, ladies and gentlemen, let's draw it to a close there. As always, time flies when you're having fun. I hope you have found today's session useful. I hope that's given you a little bit of insight into the many different ways that you can trade reversals of trends, lots of different ways, okay, to go on top of what we discussed last week. Lots to sort of cover there. As always, I hope you have yourselves a fabulous trading week, ladies and gentlemen. I think it's going to be an interesting one, so keep your powder dry. Make sure you use your risk management, and I look forward to speaking to you next Monday on the next ActivTrades Monday Market Matters webinar. Trade well, everybody, and I'll speak to you soon. Cheers.